Warren Buffett releases letter to the shareholders this week, and it's definitely a great insight from the mind of one of the best investors of all time, talking about the year that was for Berkshire Hathaway, talking about, how the company performed, what moves they made or lack thereof. And I found it very interesting. So I put some key points together, thought I would make a video about the things that I found interesting, and I hope you will too. If this is your first time here, my name's Nick. Welcome to Ways to Wealth. Before we get into the video, I'd like to ask you a huge favor. If you learn something new or you get some value, hit that like button for me. It definitely helps me out. And if you haven't already, please consider hitting that subscribe button, turning that notification bell on. We do this every single week. Let's get right into it. Most important point right off the bat, we could see here, operating earnings are what count the most. This is the category, criteria, whatever you want to call it, that Berkshire focuses on the most, and that is their goal year over year to increase this number, and they look to do so by acquiring large and favorably situated businesses. Now, this is something that a lot of people were watching through the 2020 year, is what moves is Berkshire going to make? What is Charlie and Warren going to do? They were sitting on a big pile of cash. And, as the year went on, we learned they didn't do nothing. And, they talk about this a little bit further down, saying that operating earnings fell 9%. Obviously, they're not happy with it. But what they did do is they bought back shares. Now, we'll talk about this a little bit further in depth in a bit, but obviously they're taking shares out of the marketplace. And if you're already a shareholder, they're giving you a larger percentage of the company, and you don't have to buy any more shares. The next part, it kind of highlights the accounting principles of Berkshire, and this was basically a huge learning part for me. I did not know this in the past. But basically, if they don't have a majority position in the company, like Apple, for example, where they have 5.4% of outstanding shares, they can't attribute any of that onto their balance sheet or on the income statement. They can't account for any of those numbers, but they basically highlight that they can only put the dividends that they receive from Apple on their balance sheet. But obviously the companies that they're buying are growing, so they will be benefiting from those capital gains. So again, like I said, our portion of their earnings is not included in Berkshire's income. Only what they pay us in dividends is recorded on our books. Under GAAP, it's GAAP principles. The huge sums that investees retain on our behalf become invisible. Moving along, we do have kind of what I call Warren owning up. He's always been honest, upfront, definitely gives us, the true picture, the good, the bad, and the ugly. And after highlighting some of the year that was, he did bring up the fact that they did have an $11 billion mistake. And this was with precision cast parts. So with this company, he goes on to say that he does not have a problem with Mark Dunnigan, who is the CEO. He just goes on to say that he paid too much in the time. He said that the over time, he was not correct in his ability to calculate what the average amount of future earnings was. So obviously that miscalculation led it to be overvalued, and unfortunately they've had to take an $11 billion write down. We all make mistakes. Obviously, when you're dealing with the amount of money that Warren's dealing with, that mistake just happens to be a little bit more drastic. Moving on, what I mentioned before, Berkshire, if you're not familiar, is a conglomeration of a bunch of different companies. Now, they do get some negative feedback based on this, is because investors feel like they're not really honing in and specializing in one industry. Berkshire has a majority, or not majority, but a large position in Coca-Cola, Apple. They own Geico 100%. They own railroads. They have multiple different energy companies. They have multiple different companies spanning many different sectors. And, like I said before, the investors consider this to be a hodgepodge of unrelated businesses. But yeah, from there, he goes on to say that Berkshire is different. And Berkshire is different because other conglomerates dipped into this universe of mediocre businesses. And they often found themselves required to pay a staggering control premiums to snare their quarry. Basically, what this means is they overpay. So different conglomerations overpay for the businesses that they want. And then from there, when they go to sell their business, it's normally overvalued and it becomes cyclical. And basically, one of my favorite Warren Buffett quotes is that when the tide goes out, you'll see who's swimming naked. So basically, he's just proving and providing facts that Berkshire Hathaway, although a lot of investors may think he's outdated, now there's still more to go there. So he's just kind of reminiscing and giving highlights as to, don't forget who we are. We'll find the discounts. We'll be the value play. From here, it's one of his learning lessons, and one thing that I've definitely taken out of this, and I'll just read it here briefly. Charlie and I want our conglomerate to own all or part of a diverse group of businesses with good economic characteristics and good managers. But Charlie finally convinced me that owning a non-controlling portion of a wonderful business is more profitable and more enjoyable and far less work than struggling with 100% of the marginal enterprise. Basically, Warren wanted to go in, find great companies at great valuations with a lot of intrinsic value, a lot of room to grow. But he wanted to own the whole pie, or he wanted that 51% so he could be making those decisions to kind of help that business forward. Charlie came in and said, whoa, with that 51% and that majority, you're going to have to get your hands into the nitty gritty, deep down into the business. Let's just take our 5, 10, 15%, find that good business and let it grow. So that's definitely something that I found interesting there. They go on to talk about their 4 jewels, and what they mean by 4 jewels is the 4 companies that make up the most of Berkshire Hathaway. So first and foremost is the one that I mentioned before, and that is Geico. They own 100% of that, and they are the largest in value in our property/casualty insurance operations, which for 53 years has been the core of Berkshire. So Geico's been in the portfolio for 53 years. They also got Ajit Jain with them, who I believe is slated to take over the company, or at least not take over, but run the company when that time comes. You guys all know Geico. I won't go too much into depth on this one. The second and third most valuable assets, well, the second is the railroad, BNSF. They are America's largest railroad measured by freight volume. The third is Apple, that 5.4% ownership that they had. And the fourth is the 91% ownership in Berkshire Hathaway Energy. Moving along here, so those are basically the 4 jewels, the crown jewels of Berkshire. Moving on, we have last year we demonstrated our enthusiasm for Berkshire's spread of properties by repurchasing the equivalent of 81,000 Class A shares, spending $24.7 billion in the process. Now, if you go on to read this further, basically what he's saying is, we increased your ownership in all of Berkshire's businesses by 5.2% without requiring you to touch your wallet. So they bought back shares. They bought back almost $25 billion worth. That's one way that they've definitely added value to the investors, and something that a lot of people were curious to see what they were going to do with the cash. Well, it's not all of it, but it's some of it, and it shows that they're doubling down and they're betting on themselves. Moving along, Math of repurchases grinds away slowly but powerful over time. The process offers a simple way for an investor to own an ever-expanding portion of exceptional businesses. Basically, this is just highlighting the fact that they've done some basically investing into Apple. Apple is also involved in the process of repurchasing its shares. So you're actually getting a larger ownership in Apple by holding Berkshire. So that's definitely something of interest here. Highlights some of these companies that don't go on their balance sheet, but the amount of ownership that they have. 400 million shares of Coca-Cola at an average price of 1.2 billion. And this is valued in the market at 21 at the time, at December 31st, 2020. You see some of the other names that are in the portfolio, your GMs, AbbVie, which I believe is a relatively new position, but don't quote me on that. Bank of America, you have your, Chevrons, Mercks, and so forth. So that just gives you an indication of the companies they have a large ownership in, but cannot sit on the balance sheet. Is this section, I didn't want to highlight it all, but what I wanted to do is a quick description. And this is all about never bet against America. He talks about some of the companies that Berkshire has partnered with in the past however many years that Berkshire has been around, whether it's small companies in Omaha, like the furniture company that he purchased, or companies in Tennessee. He says that there is still a lot of growth in middle America, and that's kind of the focus in this portion. So Sea Candies, he talks about that the furniture company, I forget the Nebraska Furniture Mart with the immigrant from Russia and her son, mother and son business. He won a Purple Heart, came back from the war. They grew the business to a $60 million company. And something that Warren couldn't resist when the opportunity came to work with them and take that over. Clayton Homes was the company in Knoxville. So basically, don't bet against America. He's keeping with the same theory, the same motto that he had in the last shareholder meeting in Omaha that we all experienced online. Definitely something new for him and for the rest of us as well. I know it's a pilgrimage. A lot of people do head out there every year, so it's definitely something that was a little bit different, and the team was able to jump on their feet and make that happen. The next up, ownership of Berkshire now resides in 5 large buckets. So in this section, he breaks down the majority owners of who is involved in the company. The first bucket is obviously himself, and he basically says that as he moves on to a better portion of life, the shares will be distributed to various philanthropies, so his ownership will decrease. From there, 2 of the remaining 4 buckets are filled by institutional. 1 of them are index funds, so they have to own Berkshire because they're in the S&P 500. And the other one is the active investors that are looking to, find opportunities in the market, take advantage, outperform certain indexes that they're based against. So that's one of the other buckets. The 4th bucket is individual shareholders like you and I, who operate in a similar manner to active, where you're in for a day, you're out, or you're holding for 3 months or so. But he's not concerned about that. What I want to point out is that he is a big fan, and he appreciates everybody in the 5th bucket, and those are the ones that invest, buy and hold, forget about it, and just put their faith in Charlie, Warren, and the team to grow this business, grow the wealth over the long period. So he's definitely appreciative for that type of investor in this section of the letter, which is awesome. And he's basically goes on to highlight why they don't wine and dine or kind of get the word out about Berkshire. And he says, we have already all the investors that we want, and we don't think that they need to be upgraded by replacement. So definitely, you know, faithful, very, very faithful man. A Berkshire number that may surprise you, and this definitely surprised me. So Berkshire owns American-based property, plant, and equipment. That makes up, you know, business infrastructure, which I'm super bullish on in the next 5 years as we start to rebuild the economy. But basically, the GAAP valuation exceeding the amount is more than any US company. So they own the most property, plant, and equipment in the US than any other company. You know, the next on the list is AT&T, and 127 billion for AT&T. Berkshire is 154 billion. So, you know, when he says never bet against America, well, he's living it to this day. Yeah, that's basically what I found interesting. It was a combination of never bet against America. He did highlight the fact that the company didn't make any acquisitions last year in terms of, you know, taking that 100% ownership. But he talked about, you know, maybe it's not that 100% ownership anymore. Maybe it's what Charlie suggested in the sense of, hey, let's just put, you know, 5-10% down and let that company run. We don't have to be involved with the management. They're already a good business as it is. Let's let them run and run free and just, you know, cash in at the end of the day. So yeah, it was a very interesting letter. I know a lot of people were expecting Warren to make moves, jump into the market. So yeah, that was 2020 for Berkshire. It was also announced that this year's shareholder meeting will be in LA, virtual again, of course, but that's going to be May 1st at 1 p.m. Eastern. It's definitely something that I have been watching over the past couple of years. It's always good to see the two grumpy old men get up there and shoot the shit about what's going on in the economy. Well, I hope you enjoyed my breakdown of the letter to the shareholders for Berkshire. I hope you got some value out of the video. If you did, again, please hit that like button. It helps me out. And if you haven't already, you made it this far in the video, consider hitting that subscribe button, turning that notification bell on. We do this every single week. I hope you have a great week in the markets. Happy trading.